So in part number one, we'll discuss about the market, right? So we'll start with NSE Nifty. Perfect. We have the chart. Let's count the candles first. So this is 29th, 28th was holiday, 27, 26, 25, 22, right? 25. Okay, so this was a 4-day week, and these are the candles. So let's analyze them. So on Friday, right, it was a massive sell-off. So this was the highlight for the whole week. So if you say that due to MSCI adjustment or sell-off that has happened, that is one, and FIs are also selling big time, that is two, and due to all these factors and the geopolitical scenario that is going right now, the market has broken big time in last 15 to 20 minutes, I believe. During the last 15 to 20 minutes, it was very bad. Suddenly, from say minus 100 points, the Nifty fell, I think, 300 or 350 points in one go. The candle was also very bad, and the volumes were also very bad. So things were kind of very bad that day. So it is the current standpoint. So it looks like an inverted flag formation wherein the breakdown has happened below the flag. So this is the pole that we were talking about. So this was the pennant formation. So on Monday, the Nifty gapped up convincingly. It was a follow through day. Let me just mark it like this. So it was a follow through day, not a strong follow through day because volume was not that high. So if we look into this volume, it was below the moving average, but it was higher than the prior one. So it qualifies for a follow-through day, right? But it was not a strong one. So this was the gap that was created, and in turn it filled the gap that was here. And I believe the low of this one, 24,126. The high was 24,054. So this gap is still there. So one gap remains, and thereafter, in next 3 days, the market fell off. So we can see that this was a bad day close. Again, a distribution day. This was flat day, but on high volumes, and this was a bad breakdown. So we can see that in a single day, the Nifty has broken below 50 DMA, as well as the index has broken below 21 EMA. So in a single go, right, the market has broken down below all the moving averages in one go. So it's kind of a very bad close for the market as on date. So we'll have to wait and see if this continues thereafter, say tomorrow or there day after. And for now, we'll have to wait and see if the market again catches back above the 50 DMA, that is 23,682. So basically, right now, the situation is like the consolidation is going, and this consolidation is lasting for long. And the reason is quite evident that the earnings for Nifty 50 has not been as strong as it has been for the mid caps and small caps. So, to give an understanding to you guys that Nifty 50, the PAT growth has been on an average, say, 10%, and for small caps it is much better. I think it's around 16%, and for mid cap 150, right? So these 150 guys have the strongest earnings in the country, and their PAT growth has been around 22%. So this is the whole highlight, and this is the point around which we'll also discuss the charts, right? So we can see that from for last 2 weeks also, the mid cap 150 has been the strongest segment, followed by the small cap, and finally the Nifty large cap, right? So the large cap are kind of lagging right now with respect to the price formation. The big guys like Reliance, SDFC, and other guys that you see, right? Those are kind of system in themselves, and the earnings are kind of tepid there. And also, the market is kind of factoring in the kind of earnings that might come in quarter one of FY27, the quarter which we are in right now. For example, April, May, June this year, right? So this is the actual quarter one of FY27, and there would be an impact of crude, LPG, and obviously the gas dependent sectors. We would have some margin compression out there that would happen, and that would be reported in quarter one. So the market is factoring in two things right now. Number one being the tepid earnings that is there for Nifty. The Nifty is growing at a rate of say nominal GDP rate. That is not a good sign actually. That is one. Number two being quarter one of FY27. The current quarter might be a compression quarter wherein we might see some margin compression happening. So that thing is also being factored in right now. We are one of the only main markets globally who are not around the all-time highs. Actually, our all-time high is around 26,373, and we are struggling around 23,547. So there is a gap of 3,000 points. So actually, we are away from the highs right now. So we'll have to wait and see if we catch up with other markets or not. The last highlight for this whole constellation or downfall is the FIA selling, right? This is a very common news amongst all the market participants right now, wherein the FIs are selling big time almost every day, and DIs are trying to hold the flag, right? So I don't know how long it would be done, but still, there is no relief from the FI selling thing. So right now we can say that it is a very bad breakdown on a very high volume, and to regain the strength, we'll have to wait and see if the market catches up above 50 DMA of 23,683. If it is done, then again we'll be optimistic and say that okay, everything is fine. Else, again, this partial gap that is available around 23,154, this gap is still open, and we are just shy of say 300 points, right? That is hardly 1.1% right now. Okay, so if we fall say 1.1 to 1.5% further, we'll have the potential for the full gap filling that would be done. Okay, last time, as we know, this is a partial gap filling done here. So I'll just write it here. So this was the partial gap filling done at this point of time. Right now, there is an opportunity that the full gap filling could be done basis the movement that we might see this week, right? We'll have to wait and see. And lastly, to reiterate back, our thing is intact, as in the bottom is intact. Day one, this is the day one bottom that was there, which is still intact right now. And last week we talked about three landmines, right? 23,915, then 23,928, then 23,964. And finally, we concluded that, okay, let's not remember so many levels. Let's understand one thing, that on a weekly basis, by Friday EOD, if Nifty closes above 24,000, it's a very good sign for the market. If it does not, then we would see a move on the either side, right? And again, for this 2 days, right, the Nifty tried to go above 24,000, but again, it resisted. And again, last day also, the high was 24,002, and the market declined significantly. So again, the standpoint is very clear. In order for the market to gain complete control, or the bulls to gain complete control, we would want the bulls to control 24,000, as clear as that, right? So as long as we are not controlling 24,000, we are just consolidating on the right hand side, and we'll see the sharp sell off and things like that. Until then, we'll have to wait and see. Once that is done, then again, as we have spoken last time, this gap around this high 25,141 is open. So once that is done and the market consolidates on the right hand side and the pattern is complete, then okay. For example, we are speaking about this pattern, right? This is the second contraction happening. So this is the first contraction downfall. This is the second contraction happening, and thereafter, when the third contraction would be done and a breakout happens on the upside, then there is an upside gap filling opportunity around 25,142. So basically, we are playing between two gaps, as you can see, right? So to conclude, Nifty, we are in a consolidation zone right now, wherein there is a lot of geopolitical issues going right now. We are a lot dependent on the crude. Crude is in control. I think it's below $90 per barrel. That is within control, but the rupee is not in control. It's depreciating and getting weaker. That's a bad sign. Beyond that, there are other issues like FIS selling, tepid growth in the Nifty 50 companies, around 10% growth is there. Quarter one being a margin compression quarter, which the market has factored already, right? So a lot of things are happening. We'll have to wait and see what all things happen to give you a roadmap. I am very happy if the Nifty fills this gap completely around 23,152. If this is done, I would be very, very happy. There would be no further risk. And then we'll have to wait and see if recovery happens on the downside. On the recovery, we'll wait and see if 23,682, this 50 DMA is being caught up. Beyond that, we'll wait and see if 23,900 is being caught up. Beyond that, we'll wait and see 24,000 is caught up. Once that is done, then we'll wait and see if Nifty tries to hit 200 DMA, right? So this is the roadmap for medium term. So we'll wait and see ultimately how things unfold. Until then, we'll just watch, right? So it is just a consolation to say. We'll move towards the second segment that we cover. That is Nifty Mid Cap 150, right? So we are switching away from the ETFs that we discussed initially. So we'll start with the indices, and we'll look into how things are looking right now with respect to the major indices. And here we are looking at the Mid Cap 150, right? So it is the strongest index right now, and it has already made the all-time high, it seems. So this high, if we see, this high is around 23,007. So all-time high is 23,007 only. So congratulations to everyone that the mid-cap 150 segment has made the all-time high on Friday, which is a very good high. And we can see that Nifty is struggling around its gap. But this segment has left a gap here, and this has left a gap here, right? So there are two gaps remaining, but this segment is very, very strong. As I've already told that in this segment, the PAT growth, reported PAT growth till date is around 22%, which is very high. It is more than two times the growth that we are seeing in the Nifty, and 1.5 times as a whole for the small cap segment, right? So the mid cap segment as a whole is the strongest pack right now, and this is where we are seeing the earliest breakout, and we can see all-time high. It has already come in this segment, right? So we'll see what has happened in the last scenario. It was a doubler, right? So in a single go, right? It was a doubler. It made 100% move in a single go. So I'll confirm that in 78 bars, okay, almost 1 year and say a few weeks. Let's take 1.5 years. It doubled, okay, in one go in the previous cycle. Thereafter, it went into a decline, and this decline happened like this. So you can see a nice decline, first contraction. Now I'll take this as a second contraction, a second decline, and thereafter a nice move and a handle formation and a breakout, right? So right now, what we are seeing an uptick in the mid cap segment, where we'll have to wait and see if it consolidates around 200 DMA or not. I think there is a high possibility that based on the conditions that is there in the market, there is a high potential opportunity for the market to consolidate around this market, like the mid cap market, to consolidate around the 200 DMA. If that is done, then that would be a good opportunity, because this is a very long pattern formation wherein the index has been consolidating from September 2024. So by this September, right, by this July end, we'll have a 2 years consolidation that would be done in the mid cap segment. The same case is for the large cap Nifty 50 as well as the small cap segment, wherein we have not performed for last 2 years, right? So during this whole while, the longer the segment consolidates, the better it is. So again, this segment is the strongest one. So we'll rank this as the number one segment, backed by the earnings that is there, and it made the all-time high altogether, right? So we'll see this relative strength also. So it went into all-time high already, and the strength is there, of course, right? So the mid-cap segment has always it has given some strength against the Nifty 500. So this is the best segment as we are speaking right now. So any consolidation around 200 DMA would be an opportunity as we are seeing. And we'll conclude this segment and we'll move towards the small cap. and then we'll see what all things are happening in small cap. So again, in small cap segment, we are replacing the ETF with respect to the index, right? So we are talking about Nifty small cap 250, right? So this segment includes the 250 top 250 small cap companies in the country. And right now, the pattern formation that we see in the small cap segment is the best one, I would say, with respect to Nifty, mid cap, and the small cap. The small cap has the best pattern formation right now, wherein we can see that this breakdown, right? This is first contraction, right? Before that, we have a nice shoulder formation. This was a short base, and the small cap this segment broke, I think, 28%. It fell like 28% in one go, and beyond that I'll mark this as contraction 2. This is 2T, wherein it fell around, say, 26%, like this. And this is the handle formation that is ongoing right now. So the pattern that we see in the small cap segment is a very nice one, which we call as a symmetrical triangle, or VCP contraction, wherein we can see that on the upside it is taking resistance on this upper band, right? So if we see this band, right, so it is taking the resistance on the upside, and if we see this band on the lower side, this line, we can see that this is taking support on the downside, right? So it is consolidating between an upward rising channel, which acts as a support, and a downward sloping channel which acts as a resistance. So this is the case of small cap 250, which is giving a very nice consolidation. So let's see what has happened in the last cycle. So in the last cycle, the small cap has given a move of, say, 113%, which is higher than the mid cap segment. So it moved like 113% in 78 weeks. 113% is a very large move. So with respect to moves, we can say small caps would always give the highest moves, followed by mid cap, and finally the large cap Nifty 50. What is a good thing in this case? Again, from September 2024, this segment is consolidating big time, and this has been the case with respect to the mid caps and the large cap also. So I'll just highlight that I think for me, this is an opportunity wherein we can see that the indices are kind of consolidating after giving a nice move. Now, let's analyze all these three indices again with respect to AVWAP, right? So let's consider from the all-time highs. So we can see that there would be a support around 16,500, as we can see with respect to this violet line. Next, we can see from here 16,490. Again, it is coinciding with the highs, 16,458, right? So to give a lump sum estimate that around 16,500, it would be a lump sum support out there, which is again coinciding with the 200 DMA, which is currently trending downwards, right? So in next few weeks, there would be an opportunity for the two indices, okay? Nifty is obviously far away from the 200 DMA, the mid cap 150 and the small cap 250. These two indices are very close to 200 DMA. So in one go, in a V-shaped reversal recovery, they both of them have crossed the 200 DMA. And one time they came to 200 DMA, again they reversed back to the upside. Now this is the second time reversal that is happening, and the 200 DMA is still declining downward. The 50 DMA is trending upward. So in the next 2 to 3 weeks, we might see a golden crossover happening, right? So a golden crossover means that the 50 DMA might cross the 200 DMA on the upside. That's a good sign. And by the time that scenario comes, right, there might be an opportunity for the index to consolidate somewhere close to 16,500. Okay. So this was an update around the small cap. So we'll again conclude the same thing with respect to Nifty mid cap 150. And I'll just go there and see. So again, as I told that it has already made the all-time highs. So for this, the median level, or what we say, the mean zone is around 21,160. If we take from this low, right, we'll have to see, yeah, so this is the low. This is 21,524. So from here, 21,160, 21,500 is there. So 22,000, right? So there are three levels because it has already moved up significantly. And if we see the 200 DMA, right? So that's close to 21,702. Same scenario persists in this case also, wherein we can see that the 50 DMA is trying to move up, and it might do a golden crossover in next 1 or 2 weeks itself, right? So that would be a good sign. But the kind of reversal that we have seen here is very bad. That happened when it hit the all-time high, and the volume is also high, right? So we can see that in Nifty as well as mid cap, the reversal is bad on high volumes. But in case of small cap, there's kind of a steady consolidation that is happening, right? All in all, why we are talking about all these patterns? Because as I told you last time, that any time that these indices, or say Nifty 50, Nifty mid cap, or the Nifty small cap, if they consolidate for more than 2 years, right, that's a ripe opportunity for the market to create a significant opportunity for the next bull run to start, right? That happens almost 2 to 3 times every decade, right? So right now is the opportunity wherein for last 2 years, that is September 2024 till date, the market is consolidating. So that creates an opportunity. So this was an update around the indices that we spoke about.